Hello and welcome to your Daily 5. My name's Erin Swenlin from DecisionPoint.com, and I'm going to give you the 5 charts that I think you should see moving into this week. Let's get it started. So I do come from DecisionPoint.com, and I would welcome you to come check out our website. The Decision Point Alert is what's going to give you the overall market assessment, give you what's going on with the dollar and Bitcoin and gold. And then in companion, we have Decision Point Diamonds, which gives you 10 stock picks, including 3 ETF picks on Wednesdays. And you'll get to know what to look for on charts and find those stocks and ETFs that will ride the tide that we've explained and talked about in the DP alert. If you'd like to try us out, use the coupon code DPTrial2 and you'll get 2 free weeks to try us out and see what you think. We tend to have a lot of sticky subscribers. They do like what we provide. All right, so let's go ahead. Our first chart, let's start with the S&P 500, the daily 5-month candlestick. So there are a couple things going on. First, we have either a pause in the rally. So here's our rally and then the pause afterward. Or we have pretty much a pause in the decline, which is going this way. We think that we're more than likely looking at a pause that is pausing the decline, not the rising trend necessarily. And part of the reason I'm thinking this is because we have this double top that is developing on the S&P. We are holding the support level, which is also the confirmation line for that double top. So we're going to know a lot more soon. If we do drop below the confirmation line, notice how interesting the minimum downside target for this pattern would lead us right to this support level at that August low. So even if we lose this confirmation line, the minimum downside target does take us down to a support level where we think we could see some support, but we'll have to make that determination when we get closer. At this point, we see a bearish bias in the shorter term based on the double top that we have here. The PMO is completely unhelpful. We have been whipsawing back and forth to buy and sell signals throughout this particular pause and this decline right here. The VIX today, as I record this, is now below its moving average. So we are starting to see a little bit of internal weakness seeping in as well. This particular candlestick, I will tell you, on Friday did occur as a downside initiation climax. So based on our other indicators, we were looking at the downside initiation to lower prices starting today. We're not seeing that resolve that way currently, but it does give us a sense that this double top will eventually be confirmed. Let's look at our Swenlin trading oscillators and our intermediate term breadth momentum and volume momentum indicators. So Swenlin trading oscillators are short term, ITBM and ITVM, as their name would imply, are intermediate term. You can see that on Friday, Swenlin trading oscillators did turn down, and that was confirmed by our intermediate term indicators, which also turned down. This all occurring on a downside initiation climax tells us that the market is weak. This isn't necessarily a pause in a rally. This is more than likely a pause in a bigger decline back here. Finally, let's look at our Golden Cross Index and our Silver Cross Index. These are indicators that we came up with and we think are absolutely the best participation and breadth indicators out there. The Golden Cross Index measures how many stocks have a golden cross meaning a 50-day EMA above the 200-day EMA. So we basically tally up how many golden crosses there are in the index to give us a percentage. And that tells us what the Golden Cross Index is. The Silver Cross Index is very, very similar. We consider a Silver Cross a 20 and 50-day EMA positive crossover. So we're looking at all the stocks within the S&P and seeing how many of those stocks have a 20-day EMA above the 50-day EMA. And that is your percentage for the Silver Cross Index. So these two indicators are really very good at catching those intermediate and longer term shifts in what's going on in the market. We do have to say that on Friday, the Silver Cross Index did turn upward, which is a good sign. However, it is bounded by how many stocks are above their 50-day EMA. You have to have a price above the 50-day EMA in order to keep the Silver Cross alive. As long as price is above the 50-day EMA, then price has the opportunity, 20-day EMA can stay above the 50-day EMA. So that's the main thing we need. And right now that percentage is the same as the Silver Cross Index. So while we did get this really nice look of it turning up, we don't see very much upside available to the Silver Cross Index. There are going to be a couple of cases where price will be below, but will be able to, or above one, but not the other, and then it'll bring it up to where it needs to be. I'm using hand signals, which aren't very helpful to you. But in any case, the Silver Cross Index is bounded pretty much by what's going on with the price above the 50. So while this looks encouraging, there's still a couple of problems there. The Golden Cross Index is flat right now, but it is below its signal line. So we do see a bearish bias in the longer term. We also see lower percentages of stocks above their 50 and 200-day EMAs. That's going to make it really hard to keep the Golden Cross at the current level that it is at. More than likely, we're going to continue to lose those Golden Crosses on those stock charts within the S&P 500. All right, so let's shift gears and look at a sector, or I should say, yes, a sector. Let us go to the financial sector. I like what's going on in financials. If you twisted my arm, I would say it's the best looking sector of all of them right now. Utilities look good. Don't get me wrong. They're on a really strong rally, but they're ready to pause. Energy looks good, but it's ready to pause. Financials look like they have the opportunity to move higher. I've got an analyst here with me, a little doggy. So financials, you can see the rising trend is looking good. You can see that the PMO is on a buy signal. RSI is positive. I like the higher low and the higher high. So we are in a rising trend, which is nice. And you can see that Silver Cross Index, it is moving sideways, but there are a higher percentage of stocks above both their 20 and 50-day EMAs. So that does give us the opportunity to see that Silver Cross continuing to move higher. I'm giving my analysts a little bit of a treat there, so they'll be quiet. All right. So let's move forward on the Golden Cross Index. That has turned up for the financial sector. Notice that all of these percent stocks above their 20, 50, and 200, notice all of them are above their 50% bullish threshold. This area, you can see relative strength building. I think if you're going to be in the market right now, financials are probably a good place to be. But where in financials? Well, I did a study of what's going on within the industry groups, and this industry group, or I should say industry groups, because if you list them, the Dow Jones US, there's a broker, an investment services, and an asset managers group, but this combines the two of them into one ETF. This was a prior diamond in the rough for my DP Diamond subscribers. and it's looking pretty good, I would say, at this point. So back here is where I picked it at that particular pullback candlestick. Double bottom, it hasn't fulfilled. The minimum upside target will bring it about up to this level of $99. I think that we're going to hit that level. The RSI is positive. PMO is on the rise on a buy signal, and you can see that stochastics are now above 80. When I picked it, stochastics were rising, but they weren't above 80 yet. If stochastics are above 80, you have internal strength. So that's what we want to see, is stochastics above 80. Just as an aside, I don't consider stochastics an overbought or oversold indicator, because I want to have stochastics above 80, which in overbought, oversold analysis would mean it's overbought. But I don't see it that way. I see the actual value as what's important. Okay, so broker dealers, I think, look pretty good here moving forward. So this would be my diamond in the rough for this week. And that's all I have for you today for your Daily 5. I want to thank you for watching. And again, I invite you to go to my website, decisionpoint.com. Check us out with a free trial. Just use coupon code DPTrial2. And you'll get a sense of what we do as far as market overview analysis, and you'll get more diamonds in the rough, not just the one I presented. Good luck and good trading.